Welcome to today's session and thanks for joining. In these live sessions, I demonstrate a technique for swing trading profitably in any market condition by taking only high probability and low risk 360 degrees trades. That does not mean every trade makes profit. Aim is to make overall profit in a month or in a year. What to do when successive trades fail? I try to keep calm and place the next trade. Even for the most experienced and profitable trader, a series of losing trades is inevitable. It may not happen every day, not even every week or month, but eventually it happens. For traders without a systematic approach, it probably happens every week. Don't ask me how I know about that, but you can guess. What do you do when that inevitable thing takes place? A trader without a robust system and technique may throw his/her hands in the air in despair. Systematic traders approach it differently. What do I do? I shared a buy candidate BLK in the market recap 2 weeks ago. In the last market recap, I repeated the analysis on APLE that I had tweeted on Friday. It was also a buy candidate. I had bought both of these stocks, both stopped out. I had traded other trades during that time, both long and short directions, but let us keep the discussion limited to the two I shared publicly before knowing the results as usual. How did I handle that situation? That both stopped out. The first thing I did was to check if the trades were proper Q 360 degrees trades. If they were not, I would have focused on only Q 360 degree trades and avoided trades in anticipation. I revisited my analysis of BLK and APLE. They were proper Q 360 degrees trades. Why did they stop out? In both cases, the market was so oversold that a recovery was likely, and the Fridays were bullish. That changed my preferred trading direction to bullish. On both Mondays, the market reversed sharply and continued to fall during the week. The bullish trades stopped out as the market fell. Again, being right on the market is the most important part of swing trading profitably. When the market does not move in our intended direction, the trades are more likely to be stopped out. Not always, but more likely, and in both of these trades they stopped out. At the close of both Mondays, there was no reason, no basis to keep a bullish preferred trading direction. I took a few proper Q360 degrees bearish trades. Some of them were day trades or 2-day trades. That is what an experienced and disciplined trader can do. Some do it better than others, and everyone does it better sometimes than other times. That mitigated the loss from the two bullish trades as the bearish trades made some profit. I did not hold on to the losing trades, but I also did not come out of them in a hurry. I let them hit the stop. I followed the plan I made while taking the trades. I did not double down on them, which would be worse. I did not think the market became even more extremely oversold and bought more other stocks. I did not do that. That would be going against the market. I went with the market direction. I closed bullish trades when stops were hit and took bearish trades when my market view turned bearish. And importantly, as both trades were Q 360 degrees trades, the losses did not perturb me. I'm not reluctant to take small losses, and Q 360 degrees trades are by definition low risk trades. I know I need only, if you may say that is only, about a 60% success rate with a 1:1 reward risk ratio to make a sizable annual return on total equity swing trading stocks. Several losses, even 40%, are part of that mathematics. That is why stop outs do not perturb me. What I do not want to take is a big loss. What I also do not want is to be a random trader. From experience, the best possible action I knew was to take proper key 360 degrees trades, keep on taking them, taking small risks, taking trades aligned with the then current preferred trading direction, and I did that. I also learned valuable insight from the 2 Fridays and following Mondays market moves. I'm going to use that insight in today's market analysis. Greetings. I'm Sagar Nandi, retired IT professional swing trading in the USA and India markets with only a single trading system queue that I developed myself. My email ID and the different websites, YouTube, social networks, X handle where I share live market and stock analysis are here. Disclaimer, this demonstration is for this is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of standardized options document from OCC to decide if options trading is suitable for you. Q runs on Metastock and registration platforms. It has multiple components. I'll use several of them today. Instruments that often move the market. Dollar index. In the weekly, dollar index shape is indecisive, color is bearish, and we have a bullish indecision at the bottom. In the daily, it is nearing jump thrust low, extremely oversold situation. Nearing that, it is not there yet. That is saying that the down move may be unsustainable, but it is not there yet. The daily candle is indecisive in shape. It is oversold because it is below the lower boundary level. However, there is no buy signal. Mega cap custom index, they tremendously influence the market more on some pockets than others. Weekly backdrop, color is bearish, shape is indecisive. Again, here also we have a bullish indecision at the bottom. In the daily, it is at jump thrust low. So extremely oversold that the down move is unsustainable. It also displayed a cluster of bullish indecision in daily. Weekly has one, daily has two, that is a cluster. That is often, not always, that is often a precursor to an up move, or at least a pause in the down move. That is not a buy signal. Friday's candle color is neutral, but shape is bullish and it stopped right near the high of the day. It is closing above the white direction line. In fact, this is the only market level instrument that closed above the white direction line. In that way, if I am going to look for buy candidates, I may look for the buy candidates from mega cap stocks. Market breadth, internal health check. Usually the market follows the internal health, not the other way around. Total view, broadest view of the market. We had a series of bingo, that is throw baby out of bathwater, panic selling for last several weeks. We also had confirmed Hindenburg omen along the way. Thanks to Mr. Ian Woodward, may him rest in peace, who invented the bingo signals. When the panic selling kept on appearing, I was looking to buy. And the 2 Fridays of past 2 weeks, actually the 3 Fridays for past 3 weeks were bullish. That's why in the last two market recaps, I was looking to buy because of the bingo signals and the bullish Fridays. But in any case, market kept on falling, and even this week, Thursday, we had another bingo signal. Panic selling so much that even the percentage of stocks above 50-day moving average hit the extremely oversold situation. If you look back, you will see that that does not happen often. The other oscillator hits oversold situation much more often, but not this one, the other being the 3-month new high low. I'll come to that. But percentage of stocks above 50-day moving average does not hit so extremely oversold situation so often. And it did not do that in the past weeks, it did it only this week. That way, this week's oversold situation is different, even more extremely oversold. The 3-month new high low hit the extreme oversold situation last week itself. Now it has recovered little bit, and on Friday something happened that did not happen for a very long time. That is, we had a large accumulation count. The accumulation happened in three pockets, that is NYSE, very broad pocket, S&P 500, large cap, large pocket again, broad pocket, and Nasdaq 100, again large cap, technology. Nasdaq 100 is tremendously influenced by mega caps, so this is in line with my thought of looking for mega cap stocks, because mega cap custom index is holding the yellow, not the yellow, the white direction line, the only market level instrument to do that. What is in favor now? If we see the last few days, growth is starting to outperform. For a long time, growth was underperforming or equal performing. Last couple of days, it is starting to outperform little bit. We'll have to see if that outperformance continues. And also the small cap was underperforming. Sorry, yes, small cap was underperforming or equal performing versus large caps. Now for the last few days, small cap is starting to outperform. If the small cap and growth starts to outperform, that may be a good time to look for small cap growth stocks, the stocks that can slim traders and also HSI traders like to trade. If I look at the total view using weekly daily, a very similar pattern as in other market instruments we saw, that is both for dollar index also for mega cap index. Total view index has a similar picture. Weekly bearish in color, indecisive in shape, we have bullish indecision at the low. Total view has hit jump thrust low, extremely oversold situation that is usually unsustainable, and something happened on Friday. It gave a big move up 3, the parent of all bullish momentum. Again, that is something that did not happen in the last 2 Fridays. This Friday looks different. It also has a bull release signal and a bullish headwind. Bullish shape candle on Friday, closing right near the high of the day. This Friday is similar to the past 2 Fridays, but more bullish after hitting more extremely oversold situation. If we break down the total view into Nasdaq and NYSE pockets, Nasdaq is weaker than NYSE in terms of percentage of stocks above 50-day moving average. Nasdaq is at extremely oversold level. Again, this oscillator does not hit oversold level so easily. NYSE is not at oversold level. So NYSE is stronger than Nasdaq in that way. In terms of 3-month new high low, the other oscillator both hit the extremely oversold situation. This 3-month new high low hits the oversold overbought levels more frequently than percentage of stocks at 50-day moving average. Nasdaq is of course more weak than NYSE, and we can see the bingos came in Nasdaq. Panic selling happened in Nasdaq, no panic selling in NYSE. On the other hand, the Hindenburg Omen confirmed also came in NYSE. Again, the Hindenburg Omen is not an immediately actionable signal, but in this case, it successfully predicted a possible downturn, but it is not always that immediately actionable. We have a bullish accumulation in NYSE on Friday, not in Nasdaq. That is showing that the relative strength of NYSE compared to Nasdaq is continuing on Friday too. If we further drill down into the major indexes, two of the pockets, Russell 2000 and S&P 1500, both very broad pockets, hit extremely oversold situation for percentage of stocks above 50-day moving average. Again, that did not happen in the past 2 weeks. Only this week S&P 1500 hit the extremely oversold level here. In terms of 3-month new high low, again, all were extremely oversold. This Friday bounced, and again it is different from the previous Fridays because this Friday we have accumulation in Nasdaq 100, S&P 500 and also S&P 1500. That was not true for the past 2 weeks. This market internal health check is showing that I may look to buy large and mega caps if the market goes up next week. That was internal view. External view, this is how most people around the globe see the market. Here, from the performance plot, we have a similar pattern as in the previous 2 weeks. The weekly interval is very bearish. Daily interval, that is Friday, is quite bullish. This pattern is exactly same as in the previous 2 weeks. And we saw in terms of internal health check, this Friday is different. We have accumulation count, we have also big move up 3 after jump thrust low in some market level instruments. Normally, looking at this weekly daily pattern at the extremely oversold situation, the bullish momentums, I would like to buy on Friday itself, but this time I'm a bit more cautious. I would like to wait to see what happens next week before buying. That is using the insight from the previous 2 weeks. Yes, this time it is even more oversold. This time we have very strong bullish momentum, much more than the previous 2 weeks, but still I'm extra cautious this time. That is from the percentage performance, weekly and daily periods. Let us see if the market ETFs at a glance charts can add more inputs to that preliminary decision. They can this week, as they can in most weeks. SPY, again that pattern continues. Weekly color is bearish, shape is indecisive, we have bullish indecision at the bottom. Daily hit jump thrust low, unsustainable low level, and we have big move up 3. Did not come in the previous weeks. We also have bullish headwind possible reversal signal, bullish shape closing right near the high of the day. Closing right near the high of the day is something that happened in the previous 2 weeks also. So that is not making me more confident about buying. What is making more confident for buying is the jump thrust low and following that big move up 3. And we have other bullish momentum like accumulation count in market internal health check. SPY is closest among the market ETFs to regain the white direction line. And we saw mega caps already is above the white direction line. QQQ again weekly is bearish in color, indecisive in shape. We have bullish indecision at the bottom. Interestingly, QQQ is underperforming. It did break the trend line support also. If it can go up little bit, it will regain the trend line support. That will create a false downside breakout. However, that is what I thought in the past 2 weeks also. It did not go up next Monday. So I am extra cautious this week. But again, here also we had hit jump thrust low. We had huge selling one of the days this week. Big move down 3. But Friday we have big move up 3 at jump thrust low. We also have bullish indecision cluster, a bull release signal, bullish shape candle on Friday closing right near the high, below the white direction line, more so than SPY. Dia, more bearish shape than SPY QQQ, though overall it is still indecisive, color is bearish, is underperforming the market, broke the trend line support by much bigger margin than QQQ. Here also we hit jump thrust low but did not have big move up 3. So I am less bullish on Dia as of Friday, more so on SPY QQQ because both of them, if I go back, had big move up 3. This is QQQ and this is SPY. Coming back to Dia, it did not have big move up 3. It did have bull release and bullish shape candle closing right near the high of the day below the white direction line. IWM same weekly pattern, bearish color in weekly, indecisive shape, bullish indecision at the bottom. Interestingly, it started to outperform. It was the weakest pocket of the market. Now it is starting to outperform. This also hit jump thrust low, unsustainable low price level, and this also had big move up 3. So there is some reason to look to buy small cap stocks too. IWM has the biggest cluster of bearish indecision at the bottom. So probably it was panic selling, provided it can go up next week considerably. We have bull release, we have bullish shape candle closing right near the high of the day, far below white direction. This is the weakest pocket of the market, but it is starting to outperform. If that outperformance continues, small caps, and we saw growth is starting to outperform. If small cap growth starts to outperform, then CAN Slim and HSI traders will have buying opportunities. But what they may not have easily is trend following trades, because IWM is very much in a downtrend. The other market ETFs are also in a downtrend. Q techniques is different from overall CAN Slim and usual HSI trading techniques in that Q allows one to take reversal trades confidently, and in this market when we are hitting jump thrust low across multiple instruments, we have big move up 3, but the bullish momentum is coming in downtrend. Traditional CAN Slim and HSA traders may not find buying candidates, but Q traders can. QH bucket analysis, thanks to Dr. Jeffrey Scott, after watching whose videos I incorporated it in my trading, made it real time, pinpoints reversal points with remarkable accuracy, and this is immediately actionable, like percentage of stocks above 50-day moving average, like 3-month new high low. Unlike Hindenburg, this is immediately actionable. Proof of pudding is in eating, so let's prove it once again, no harm. From a tweet of Tuesday 4th March 10 a.m. At that time the market was very bearish. However, bucket analysis from both perspectives showed that it was so oversold, a recovery was likely. Recovery of what? Recovery of stocks that were below lower Bollinger Band. What percentage of stocks were below lower Bollinger Band at that time? 41.7. That is 4th March. Step forward to last week's market recap. 4th March to 7th March. What was the percentage of stocks below lower Bollinger Band? 7.9. So from 41% it came down to about 8% last week. What about this week? Interestingly, you see the market is continuing to fall. If you look at the market ETFs, most of the market ETFs are market cap weighted. They are continuing to fall, but the percentage of stocks below lower Bollinger Band came down from 41% to last week 8%, and this week only 1.6%. That means stocks below lower Bollinger Band gradually recovered, though the market was falling. So what was causing the market to fall more and more during this period? I would guess the larger cap, mega cap stocks, because clearly the stocks below lower Bollinger Band, and yes, the mega caps were not below so much lower Bollinger Band earlier. I'm guessing the other extremely oversold stocks recovered. That is what bucket analysis showed, and that is what made the bucket analysis accurate predictor of possible market moves once again. Though the bucket analysis showed predicted a possible market recovery from stocks that were below lower Bollinger Band, it happened, but still 78% of stocks are below mid Bollinger Band. So it is remaining bearish. So any stocks that we may buy now, they are still in a bearish market. Those buys will likely be Recovery trades in a downtrend. They will not be uptrending stocks. Friday's market is bullish and 11 sectors, 11 out of 11 sectors were up on Friday. Sector industry stock breadth, it shows where the market came from, where it is now, where it may go next. Long term 1 month bearish, also long term 10-day bearish, weekly period is also bearish. However, 2-day and 1-day periods are bullish. This pattern is exactly same, very much similar to what we saw in the past 2 weeks. This allows buying usually as of Friday. However, looking again at how the same pattern failed for the past 2 weeks, Mondays were down, weeks were down after that. I would not buy on Friday this time. I will see if the market goes up next week and then consider buying. Find that technical breadth. We only profit by buying stocks going up or shorting stocks coming down. Technical breadth shows the overall posture to adopt and allows easy drill down to find low risk trade setups. Weekly period, bearish for all trades, strength trades, continuation trades, but reversals are bullish and significant in number. That is once again showing that I may look to buy stocks, but those will not be trend following trades probably. Mostly not. Mostly they will be stocks that are in a downtrend. Weekly was bearish overall, that is in sync with sector industry stock breadth. Daily is very bullish for all categories, strength, trend continuation, reversal, all. And it is of course not overbought. Majority of bullish trades are coming from price extreme middle. Of course, we don't expect the market to be overbought so quickly. In terms of even 3 momentum dots, it is very bullish, and this bullishness is coming from extremely oversold situation, jump thrust, red alert. However, this jump thrust, red alert and the bullish setups that came last weeks also. We also have a bullish headwind that is also not uncommon. I think it came in one of the past weeks also, but still the market fell during the next week. That's why just looking at this, usually I'd be bullish, but based on past 2 weeks experiences, I'm cautious. Market level summary. The most important trading decision is whether and where to buy or short, or whether to stand aside. This week's summary. The market fell again for the week. It became even more oversold. Many Q analysis project a recovery. It did in the past 2 weeks too. Bucket analysis, 3-month new high low, and percentage of stocks above 50-day moving average, jump through thrust low alert in Q finder. It's more oversold than before. Friday the market rallied. That happened for the past 2 weeks, but the market fell subsequently. This Friday, however, looks different because 3 of the market ETFs, 3 of the 4, SPY, QQQ and IWM went up with big move up 3 from jump thrust low. That was not true last week. Total view also went up with big move up 3 from jump thrust low. That was not true last week. Total view shows accumulation. That was not true last week. Though this Friday is more bullish in terms of accumulation, big move up 3, etc. Considering the market fell on 2 previous Mondays after bullish Fridays, I did not prefer buying on this Friday. I look for 360 degrees buying candidates if the market continues to go up next week. Review of past week's trade ideas. Last week I showed multiple stocks to demonstrate different buying styles. I was not holding those stocks except one. On Monday, the market did not go up. That was repeating the previous 2 weeks pattern. I did not buy more stocks. APLE was one stock I tweeted before the market recap. I tweeted that on Friday, 1 week ago. That was the only stock I bought before the weekend recap. On Friday, I bought APLE. It hit the protection stop on Monday and I booked the loss. I executed the plan without waiting. That was the right decision. APLE fell more during the week. Let's look at APLE using the Q charts. I shared the buying idea on this day. This trend line resistance was not there at that time. That would be this day with a bullish headwind signal, bull release at about triple bottom, and in weekly it was holding trend line support. It had excellent fundamentals, even high dividend yield, and it was in a strong industry. It was in a defensive sector. I think it was rates. But Monday the market reversed and this fell. If I look at the protection level, the protection level was hit Monday or Tuesday, any of those days. You could stop out. And I stopped out of the trade. Later on, it fell much more. I take extra care in selecting the trade ideas in the market recaps. Make sure it is all 360 degrees trade. Still, APLE stopped out. Still, BLK stopped out. Yes, on this Friday, they are looking bullish again. That is true for APLE. Holding the weekly watermark for APLE, and if I go back to BLK, by the way, APLE also hit jump thrust low, then displayed big move up 3 this Friday. So this Friday there is a case for buying it in some ways, but I did not want to buy. Unlike previous weeks, I would like to wait and see. I don't want previous 2 weeks pattern to repeat this week and get stopped out again. And if I look again at BLK, I stopped out of that. This was a peak of 2 weeks ago. I picked the stock on this day and it has fallen, but this Friday is bullish again. There is no buy setup. In any case, APLE last week's trade, I actually traded that, stopped out. This week's trade ideas. I did not take any trade on Friday for the reasons I mentioned. Looking at the mega caps, that is the only instrument that is holding white direction line. That means it is relatively stronger and some of them are very oversold. I found a mega cap that I may consider buying next week. But before going to that stock, let me show how the vital fundamentals helps me to choose a better stock, at least in some ways than others. Let's look at Nvidia. I'm just looking at fundamentals using Q Vital for this time. Why Nvidia? It is a very well-known stock. It has fallen quite a lot, like the other mega caps. And for now, let us look at fund accumulation and insider buying selling. Funds are neutral, insiders are selling. Okay. Semiconductors were strong on Friday. Friday across the board the market was strong, but I am currently focusing only on these two factors, fund accumulation and insider trading. Let's look at another stock, that is Tesla. Again, a stock that fell a lot. And yes, there are many reasons one may say why it may not go up, but I don't look at such news so much. I am aware of them. I look at the actual scorecard and technical pattern and industry score to decide what to do. Here again, funds are neutral, but insiders are opposite to what we saw in Nvidia. Insiders are buying. And of course, Friday, Tesla's industry was also very strong. Would it not be nice to find a mega cap where both insiders are buying and funds are accumulating? Remember, these are very smart groups. They have access to many insights we may not have. Certainly, I do not have. All the mega caps fell considerably, and if both funds or insiders are accumulating at that price level, that gives a little bit more confidence. I still need to find a proper technical trade setup with strong industry, but let's see what is the case for Google. Yes, we found a mega cap where funds are accumulating and insiders are also buying. And on top of that, this is a box stock. Thanks to Mr. Ian Woodward again. Box stocks mean here this box stock is different from box trade setup. That is a technical concept. Here I am using the same name box because Mr. Ian Woodward used the name box for such high growth stocks. These are high growth both in terms of longer term as well as shorter term. And certainly its industry is also very strong on Friday. What is also nice, unlike Tesla and Nvidia, not only fund insiders are both bullish, not only it is a box stock, if you look at this area, it is quite bullish. The earnings growth did not come down so much as was case for Nvidia, for example. Of course, Nvidia also has high positive earnings growth, but here we have high positive earnings growth and it is not declining so much. The decline of earnings growth is concerning relative to Google in Nvidia. Also, if I look at the seasonality, this is the month of March, it is not over yet. The market was down, mega caps were down. Google is also down so far. However, March has reasonable bullish seasonality. It's not something I use solely to decide my trades, but having a bullish seasonality is good to have. What about its industry's relative score? Mega caps were down, so this industry score is not so strong, but it is one of the most accelerating. I like that. It's a possible turnaround industry, and in the current market situation where stocks are hitting jump thrust low, market level total view is hitting jump thrust low and then showing big move up 3, I am more likely to find buying candidates in accelerating industries than in strong industries. Finally, I have not looked at the chart yet, no? Let's look at Google. Weekly is bearish in color, indecisive in shape. Very similar to many other market level instruments, but unlike many other market level instruments, this is holding the weekly trend line support. That was not the case for any of the market ETFs. This is also holding multiple daily trend line support. It has nearby resistance. It hit jump thrust low already. Unsustainable low price level, and it has something that is very uncommon, a very big cluster of bullish headwind possible reversal signal. So the weekly support, daily support, bullish headwinds, they're telling it is something to keep an eye on. I would not buy, as I said, on Friday this week from based on experience of past weeks. But if next week this goes up, that means it will break the trend line resistance. That is one of the strongest technical analysis buying pattern. Long term trend line support, short term trend line resistance breakout. And we have other reasons to buy. Technically, then I may consider buying this stock. That is my stock, and not trade as of Friday's close, but a stock I thought was worth analyzing this week. If you carry out the 360 degrees analysis using Q like that, you'll likely find other trading candidates, buy candidates today. But again, I don't want to buy. I did not buy on Friday, but you can find buy candidates today. Make a watch list of that. You can also find potential short candidates today. Keep them ready. If the pattern of previous 2 weeks continues, you may short those stocks. But at such extremely oversold situation, if I short stocks like I did last 2 weeks, I will make them much shorter duration trades. Try to close them on the same day or maybe within 2 days, not hold long time, not even 4 or 5 days, because it is becoming more and more unsustainable. What is becoming more and more unsustainable? The down move. Does not mean that it cannot go down more, but it is becoming less and less likely that it will continue to go down. Thanks a lot for attending. I look forward to seeing you in my next session. Have a great weekend, and as I always say, as I'm quite confident these live sessions, my tweets, my forum posts show, there is no reason not to do that. Trade profitably. Thank you.